I'm Jason Stipp from Morningstar. The markets don't like surprises, and the markets hate uncertainty. They got a big pile of both overnight as the UK population voted to leave the European Union. Here to talk about the impact of that vote is Tim Strauts. He's a senior markets research analyst for Morningstar. Tim, thanks for being here.
Thanks for having me.
So this was a big surprise because leading up to this, it seemed like the Remain camp to vote to stay in the EU had the momentum. So what happened? Why was the market so surprised?
Yeah, I mean, obviously, earlier this week, the global markets were positive every day, as some of the more recent polls looked like Remain was going to win. And actually, even to the very end, Remain seemed like in the best position. There was a YouGov poll that came out right when the polls closed in the United Kingdom, and that came out and said 52% Remain, 48% Leave. And even after that, the head of the UK Independence Party, who was kind of leading the push to leave, he actually said that they thought they were going to remain. So he even said, "Oh, I think we've lost." And then the numbers started coming in, and it was complete flip.
So there were a lot of bets on Remain. We saw it in the markets earlier this week. We saw it in the currency markets. And then when suddenly everyone was surprised, now those bets are unwinding. And that's why we're seeing the big drops that we're seeing.
Yes, because everyone who bought earlier in the week betting on Remain, now they are unwinding those positions. And they're unwinding it very quickly.
In a big way. OK, so let's talk about some of the impact of this possible decision. This is something that's likely to play out over months, if not longer, how this separation actually comes about. There's a lot of uncertainty. So when you're thinking about the economic situation in the Eurozone and UK, how do you start to do a scenario analysis of what could happen? Because so much we don't know right now about how this separation is going to occur.
Yeah, that's kind of the thing, is that we don't know a lot. Now, Europe is already dealing with very low growth, rising unemployment in some regions, and this is not going to help that situation. This may push United Kingdom into a recession. That's uncertain, but with all the uncertainty, businesses are probably not going to expand. They're not going to be hiring, so it's going to put it's kind of like a hard stop on some of that for some of these businesses. So there's a chance that the UK goes in recession, and potentially it kind of pushes Europe too. So Europe is a very big part of the global pie, so that has knock-on effects for the U.S. and Asia too.
And when we're thinking about bigger risks here, I think a lot of the worry that people have is, well, if the UK wants out of the EU, who's next? And we started to see some polls elsewhere from big member countries suggesting that another country could be next and another country could be next. So how do you think about a possible dissolution of the EU factoring into this mix?
Yeah, I think it's a little too early to think that the European Union is going to go away, but it does give other countries the idea, if you don't like the deal you're getting, or you don't like what the bureaucrats in Brussels are telling you what you have to do, you could say, well, I might want to leave. I mean, there was a poll in France that over 60% of people in France would like to leave the EU. Now, I don't think France is next, and there's no unlikely to be any sort of vote in France, but it does mean that the control and power of the EU is greatly diminished now. The next thing I think about is there's this negotiation now between the United Kingdom and the EU as far as how you actually separate, and no one really knows how that works because the union wasn't set up for anyone to leave. They didn't plan out, okay, well, if you want to leave, here's the 5 things you got to do. So now there's going to be a multi-month negotiation, and it's to the benefit of the European Union to make it hard, make it very difficult for the United Kingdom.
Because they want to dissuade other countries from going down the same path. So that could be another headwind potentially on the UK in trying to negotiate, because EU wants to send the message, hey, other countries, it's not going to be easy if you want to leave.
Definitely.
Okay, so given that there is so much uncertainty and given that markets tend to like to understand what's going to happen, should we sort of buckle in for a protracted period of time where, as news dribbles out, as these negotiations happen, we're going to see a lot of ups and downs potentially in the global markets? Yes.
I mean, right now, it's kind of early in the trading day in the U.S., but Europe, last I saw it was down 9%. Looking at a Europe ETF here in the U.S., Asia was down 4%. The U.S. dollar is rising dramatically, which is actually going to have real knock-on effects for the U.S. economy because that hurts our exports when the dollar rises. The pound, the British pound, was actually at 30-year lows versus the dollar last night. So volatility is rising. You know, if you look at VIX, kind of what we use to gauge volatility, dramatic increase in the VIX. And I would say is that this will calm down. The real big moves will calm down over the. Today will be very, very volatile, but I'd say next week it will calm down a little bit. But there's going to be news stories as this transition happens that are going to move the markets. And so I would say yes, this is definitely 3 to 6 months of heightened volatility.
Now, when we're looking at valuations compared to what we think could be fair valuations, do you think both of those things? I mean, obviously market valuations are changing, but do you think the actual underlying values of a lot of these companies and a lot of these markets are changing as dramatically as we're seeing the market changing?
Yeah, I think a lot of these moves are more short term. When we looked at valuations before all this happened, we kind of thought Europe was going to be undervalued by maybe 3 to 5%. But you got to throw that out now. I mean, there's going to be a hard stop on a lot of these companies. They're not going to be growing, so those valuations are definitely going to change. So I would definitely lower the valuations. Whether it's down as much as 9%, probably not. So there may be some opportunities out there, but I'd be very cautious right now. There's going to be a lot of big moves. If you're going to step into this, you got to think long term. I definitely wouldn't want to day trade this type of market. It's a really good way to lose some money. So I would think long term. If you want to rebalance your portfolio, I wouldn't do anything like, I'm just not going to invest internationally. You definitely still need to maintain your international investments and even Europe investments. You just got to be a little more cautious.
So if you have a long-term asset allocation-based kind of strategic portfolio plan, there's probably no reason at this point to blow up that plan. You might be able to rebalance. You might be able to do some small opportunistic on the margins if you're comfortable doing that, but probably no reason to make big bets right now or blow up a plan right now.
Definitely.
All right, Tim, thanks so much for your insights on the Brexit vote and for joining me today.
Thanks for having me.
From Morningstar, I'm Jason Stipp. Thanks for watching.